Greetings, and thank you for your continued trust in Baumgren Retire Plan, as well as your patience during these very difficult times. Trust me, I'd much rather be meeting with all of you in person. This quarter was certainly quieter than previous quarter, at least from a stock market perspective. In fact, overall, market performance seems to almost be purposely sitting in a holding pattern. I'm going to get into that here in a moment. But I'd like to show you a few charts here to illustrate what I mean. We notice here year-to-date performance of the S&P 500 as well as our Wilshire 5000, which is generally indicated as the overall stock market activity. And we see here from year-to-date numbers, overall market performance is about even for the year. You see our deep valley in mid-late March, a nice clawback in the coming months. Here we are, just about flat for the year. We expand that. Let's take this out. 5-year trend here shows stock market activity, the same indexes, right around that trend line. And our last slide, though, why do I say that it's purposely sitting in this holding pattern? Well, we see here economic activity as indicated in GDP of here in the US in recent quarters, a sharp decline in overall economic activity is represented by GDP when we compare it to historic, unprecedented. So we see here there's a huge disconnect between the strength in stock market activity and that of economic activity. GDP, unemployment, overall deficit numbers, they do not support the stock market's seemingly unstoppable confidence. But the positive with that is this portfolio return and overall performance for all of you is in good shape. However, as noted there in those concluding slides, we still have many reasons to be cautious. So let's talk about that. Let's talk about a couple triggers that we're looking at that we believe could lead to short-term positive breakouts in stock market activities. Both of them related to the COVID-19 pandemic that we're in. First is that of a vaccine. A few numbers here. As of early August, of the potential vaccines, 25 are in phase 1. 17 in phase 2, and 7 in phase 3 trials. Outstanding. Dr. Anthony Fauci said, and I quote, "It's a definite possibility that the US would have an effective vaccine by early next year," talking about 2020. So the abundance of potential vaccines, the so far positive results and comments, such as we just mentioned there, are contributing to the stock market's enthusiasm, its support, strength, and could trigger then short-term positive fluctuations in the market if, of course, realized. Obviously, if not or postponed, we could see that strength in the market decline. Another scenario, which we've been dealing with for many months now, is really just learning to live with it. Many states now have become new hotspots. The old hotspots seem to have some reducing infection rates, and some in fast paces. We feel that though a sustained period of declining or flat infection rates, this too would instill some enthusiasm and short-term fluctuations in the market. So we are keeping an eye on both of these possibilities. However, let's take a moment though to talk about what we're doing now in the portfolio. Now is an especially good time for us to evaluate portfolios. We've seen some dramatic changes in the investment climate year to date, and it's a good idea to look from time to time at the winners and losers, so to speak, to look at overall allocations and if there's any areas for opportunity. Also, because bonds and fixed income yields are so depressed currently because of the pandemic and government economic stimulus bringing those interest rates down, when we compare the risk versus return, risks meaning default of bonds versus the return of the overall yield, we feel that it's not as attractive for new investments, for new money at this particular time. What this means for you is why in the short term, our defensive approach, meaning reducing overall stock positions in recent months, we've kept those in the cash and money market positions, foregoing just a small amount of yield for really the guarantees of no default, like what we would have on potentially with bonds. And lastly, another activity that we're keeping close eye on and doing in the accounts is keeping a healthy allocation of really sectors that haven't performed as well as some of the high flying stocks that we've seen this year, like Amazon and Tesla, et cetera. But really historically have been good investments, for example, represented by high dividend stocks, or the large cap value space, and the small and mid caps as well, keeping a healthy allocation of those for potential rebound. So I hope you have found this information informative and helpful in understanding how our firm is basing our investment decisions. And we thank you for your time, and as always, welcome questions. So please email me if you'd like to set up an appointment to review your accounts. In the meantime, be safe and have an enjoyable rest of your summer. We hope to see you all very soon.